What is going on, investors? Hopefully you guys are doing well out there. That is right. It is a Friday, and that means it's time for the FANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news of the week, plus the technicals from all the major FANG stocks, plus Microsoft and Tesla. We'll kick things off this week like we always do with Facebook. Started the week much higher at $199. A lot of these stocks started up, went down, went up, came back down. This one ended the week at $187 per share. Now, Meta Platforms rose earlier in the week as Piper cut its price target, but it reiterated its overweight rating. So Piper had a price target of 301 on Facebook. They lowered it to 240, but they're still reiterating that they'd be overweight to this name. The stock obviously sitting at about $187 per share. So a 240 price target, quite considerable upside. We'll talk about this from a technical perspective here in a moment. I have timestamps down in the description if you want to jump around. But look, when we look at Meta here in a moment from a technical perspective, are we forming a bottom? Is this stock going to just keep going down? There's a couple things that we're looking at here. I hate to tease this, but we'll get to that segment of the show here shortly. With all of these stocks, we're looking for signs of bottoming and signs of a reversal for the most part, outside of maybe Apple, and I'll show that to you here in a second. But this week was a down week, and if it continues, boy, more technical damage probably coming for most of these stocks. Moving on to Apple, started the week higher at 163, ended the week at 154. This was an Apple event. Some of you might have missed this one, but they announced their iPhone SE, which is, quote, kind of a cheaper version of the iPhone. It's on an old body style that still has the home button. It's a smaller design. It has less bells and whistles than kind of the flagship phones that are over $1,000. The iPhone SE is meant for people that want maybe a little simpler phone, maybe a little older demographic, but it's also somebody that might be new to Apple's ecosystem. And so it's a key phone for this company. They tend to announce it kind of in this Q1, Q2 area. They also announced Friday Night Baseball, which is significant now that they announced that I believe that Major League Baseball is to return. And so on Apple TV, you are going to get exclusive Friday Night Baseball games. What I think, the baseball, look, it's not going to really drive anything, especially to a $100 billion kind of a run rate on a revenue basis that Apple runs at. But what this probably does signal to me is Apple is going to be very, very serious about getting the NFL rights. And we've talked about that over the course of a few weeks, really over the course of a few months, how there's really just three major players for the NFL Sunday Ticket, which does not expire this year. So this upcoming football season, which is scheduled to start sometime in August of September of this year, that is still going to be on DirecTV. The following year, you're going to need either Amazon Prime, Apple TV, or ESPN. And in my guess is just based on the balance sheets and the fundamentals that we know about these companies, unless Amazon really wants to make a big play into this, Apple is the one company that can afford this year after year of essentially a sponsorship to the NFL for those NFL Sunday Ticket rights. And I think the fact that they've gotten into baseball, they recognize the stickiness and the demand for a sports product to draw eyeballs into Apple TV. Well, the NFL Sunday Ticket would be the icing on the cake. They also announced in here, and they kind of just gloss over it, they announced a new iPad Air, which is rather significant. It has the Apple M1 chip, which they've been putting in some laptops and some other computers that they make. Basically turns the iPad into a computer in terms of performance. But they also announced a new version of the M chip, including the M1 Ultra, which is essentially two M1 Max chips that are fused together, and it creates just a gigantic computer from a computing perspective, a 20-core CPU, 64-core GPU, which is nearly 8 times faster than the original M1 chip. Essentially, this chip is and it's packaged in this Mac Studio, which used to be called a Mac Pro, but it appears that Apple teased during the event that this Mac Studio is not going to be the highest of high-end desktops. They are likely going to release one more version of this M1 chip. My guess is it'll probably be a quad version, one that maybe two of the chips kind of stacked together, and it just creates obscene performance depending on what you're doing. Look, NVIDIA still has fantastic chips. Intel makes some great chips. AMD makes some great chips as well. None of those companies are going to be put out of business, but this just shows you that Apple is on the forefront of this technology and quite frankly is making some of the best computers from a performance perspective at the current time. And not only that, they charge a premium price for them as well, which is really important for shareholders. Apple's latest iPhone SE should buoy customer interest. This is what we talked about, how the iPhone SE not necessarily going to take a lot of headlines, not necessarily something that maybe, you know, the Apple fanboys and stuff like that are really going to focus on, but it is a great gateway product, and it also is good in international markets as well, where a $1,213 phone doesn't necessarily go over well in those markets. Well, a phone that's priced more in that $400 to $500 range, certainly more affordable for more people out there. The big, gigantic news out of the week came from Amazon, which started the week at $2,908 per share and ended up flat, basically at $2,915. But we see this gigantic spike midweek as the stock jumped 10% after announcing a 20-for-1 share split and a $10 billion buyback. I can't say as an Amazon shareholder, I'm really excited about either of these two things. I don't think that, look, the stock split is neither here nor there. I'd rather than take this $10 billion and buy the NFL Sunday ticket rights or something like that. Maybe this is a sign that they're not going to get those rights, and so they're going to pour that money into a buyback. Now, Amazon already had a $5 billion buyback authorization starting in 2016, of which they bought back not even half, about $2 billion worth of those shares. So they haven't really been executing on their previous buyback. They essentially added another $5 billion to this, making it $10 billion. But one thing that most people are going to focus on is this 20-to-1 stock split, which will be consummated after shareholder approval and those types of things sometime in the first part of June. So if you have one share of Amazon, you will get 19 additional shares. Now, you are not going to get 19 shares that are worth $2,910. You have to divide this price on the day of closing by 20, and that will be the value of Amazon stock. This will open up it to more investors that have accounts like I do, where you can't buy fractional shares. I tell you what, I probably would have bought Amazon, especially when we look at this from a technical perspective here in a moment. There are plenty of times over the last year that I would have dipped my toe in and bought a little bit more of Amazon, not necessarily a full share, but maybe a couple of fractional shares here and there just to add to a position that I already have, because I don't have access to fractional shares. I wasn't able to do this. This stock split certainly will allow us to do that when it comes to Amazon. Now, Amazon could be probed for criminal obstruction of Congress. This is not good. This is a House Judiciary Committee that is going to start a criminal probe on Amazon for potential obstruction to Congress. Congress has essentially been subpoenaing Amazon, has been asking them for different types of information, and essentially Amazon's been just gaslighting them. They've just looked to thwart the efforts of the committee, or just not respond at all, or not really respond. And this likely relates to the fact that Congress believes what Amazon does is they take the data and they look at the products that are selling well on their platform, and then all of a sudden they copy it. So a third-party merchant might list some batteries, or might list a certain type of mattress or clothing or any type of item on the platform. Amazon sees it selling well, and they come in there and they create a competing product, and they usually charge a lower price, and obviously their search rankings and all this thing. Look, Amazon is 110% guilty of this. I say that as an Amazon shareholder. I say that as someone that actually sells on Amazon. I say that as someone that actually has a lot of affection for Amazon and what the company is doing, but they are 110% guilty of plagiarizing on the third-party products that are listed on the site. And whether or not that breaks any kind of law, whether or not that's something that Amazon should be punished for, I'll let the lawmakers decide. But the fact that Amazon is basically avoiding some questioning and avoiding some questions from this committee just shows me even more so that they are guilty. We've all known this in the Amazon seller community, that they are guilty of this. Quite frankly, I would like to see, this is probably the one of the very few things I like to see a hands off when it comes to regulation. Okay. This is probably one of the few cases where I think regulators would be wise to step in here and maybe clear some things up, what Amazon can and can't do when it relates to creating competing products for third-party sellers. Europe is set to unconditionally clear Amazon's $8.5 billion MGM studio buy. This clears the way in Europe, but obviously we know here in the United States, the Federal Trade Commission is taking a longer look at this and will likely weigh this far more heavily than Europe set to do. Europe is looking at this likely in a little bit less political fashion, if I could say that, because look, Europe is probably looking at this and saying Amazon doesn't have a dominant position when it comes to media. I mean, there's all types of media platforms out there, and many are much, much larger than MGM Studio and much, much larger than than what Amazon is going on. Now, Amazon combined with MGM Studio, combined with what they have, is a formidable player. But look, there's Comcast, there's Netflix, there's Disney, there's Time Warner, there's Roku. I mean, there's a ton of them out there, right, that are playing in this space. We've got Paramount. I mean, we could go on and on and on. Amazon is one player in that group. They don't necessarily have a dominant position here. I like what Europe is doing. We'll see if the United States follows suit. Moving on to NVIDIA, started the week at $228, ended the week after hours at about $220 per share. Interesting level from a technical perspective. Not a lot of news, though, out of NVIDIA this week. Moving on to Google, started the week at $2,612 per share. This is the GOOGL shares. No particular reason. I got a lot of comments on my channel as well wondering which Google stock is going to split. They're all going to split, okay? It doesn't matter what shares you own of Google, they're all going to split, obviously pending that approval, which we'd have to assume is going to go through, but all the Google shares are going to split. So it doesn't necessarily matter which one you own, depending on voting rights and how you view that type of things as a shareholder. But nevertheless, this one started the week at $2,612 per share, ended down to about $2,604 per share. These values will change quite a bit when we see Google and Amazon split. Now, Google agreed to buy Mandiant for $5.4 billion in an all-cash deal, which is basically like 55 cents to Google, because $5.4 billion to a company like this is not a lot of money. But what was interesting about this is I think 2 weeks ago, we reported that Microsoft was set to buy this. Now, Mandiant, and forgive me if I'm not saying that right, but it used to be called FireEye, which was a much more well-known company. But back in June, they renamed the company and actually sold its software business and the FireEye name to another company for $1.2 billion in cash. That left this essentially cybersecurity company in public shareholders' ownership, and Google has stepped in and bought this company for $5.4 billion. Again, pending regulatory approval and those types of things. What this article or this headline is saying is this is a shot across the bow at Microsoft, which was rumored to buy this, but also Amazon as well, and anybody kind of in that cloud space. We are likely to see a consolidation in the cybersecurity space. One thing could be is that regulators are going to allow these deals to go through. I'm not saying that I know that for certain, but I'm saying a deal like this would first of all, it's $5.4 billion. There's a lot of cybersecurity stocks out there. I wouldn't necessarily think that Google or Microsoft or Amazon could go by the market leader or the market cap dominant one, but they certainly could step in here and pick off these kind of, quote, smaller players for these prices, and regulators will likely let that go through. Moving on to Microsoft, started the week at $287 per share, ended closer to about $280 per share in the after hours. Prosecutors are probing Barry Diller and David Geffen, of all people, on options activity after the Activision and Microsoft deal was announced. Essentially, these guys likely got news of this deal. They probably bought some options, and my guess is they're probably guilty of this. They'll get a slap on the wrist and, head on down the way in their yacht. We'll see what happens there. Not a lot of news other than that out of Microsoft this week. Moving on to Tesla, a lot of news out of Tesla this week. Started the week at $859 per share, ended down to $795. I think you can just be patient. We'll talk about this from a technical level as well. I think you can be patient with Tesla, because there's like two sets of headlines. It's like a bipolar set of headlines over at Tesla. So electric vehicles stop rip as oil battle rages on. So we obviously know, I cut out there was a ton of headlines from Facebook this week and Google and all these companies cutting off ties to Russia. And we could go through all that here on the channel, and I'm probably wasting a little bit of time talking about it right now. But look, that's neither here nor there. I don't think that's going to really move these stocks in the shorter term, and even in the longer term. Doing business or having business in Russia for most of these stocks, not really going to be that big of a deal, quite frankly. But electric vehicles are obviously being demanded far more as we see the price of oil just continuing to skyrocket. I've seen pictures of $6 a gallon gas, $7 a gallon gas, especially if you're out here in California where you are. It's probably closer to $3 or $4 here in the United States at least. And so that's obviously increasing the demand for these electric vehicles. But unfortunately, auto stocks were also reeling as it weighs the commodity headwinds. We saw the price of nickel skyrocket this week, and other commodities and metals and types of raw materials that come out of the Russia region. That is the one part of Russia that certainly bleeds out into certainly a stock like Tesla. So we saw saw a little bit of a push-pull from investors this week. We saw some investors probably correctly surmising that the fact that gas is going up, and so the demand for Tesla is going up. And if you go to the Tesla website, which I don't have up here, they've raised the price on some of their cars. And I also notice the delivery times on the cars keeps getting pushed back and back and back. So the demand and people pre-ordering these cars is likely flooding into Tesla. Maybe they'll give notice about that on their upcoming earnings report. They usually don't talk about like kind of pre-order numbers anymore over at Tesla, but it could be that they get so big, and the fact that we have some demand being pushed back by the fact that commodities is all being disrupted by what's going on over in Russia right now, that certainly could weigh on Tesla in both ways, that they have a lot of demand because the cars are being demanded because of high oil prices, but they can't make the cars because of the raw materials prices have all of a sudden soared and gotten harder to get from countries like Russia. We'll see what happens there. Interesting though. Tesla sells 56,515 China-made vehicles. That was just in February, and local deliveries up about 20% sequentially. That is just showing you that you have just this gigantic demand for Tesla in China. And the next headline is even more positive for Tesla, as they gained a major advantage in their Europe business after opening Giga Berlin officially. I think it was later last week. We might even announce this on the show. This gives them another roughly 500,000 vehicles annually that they can produce out of that facility. We're obviously seeing similar type, in fact, maybe even greater than 500,000 capacity in the China facility. In the next week or two, we'll likely see full approval here in the United States at the Texas Gigafactory. This is adding, when you factor in Berlin and you factor in Texas, you're probably looking at another 1 million cars that Tesla is going to be able to produce, not necessarily over the course of the next 12 months. Obviously, with some of the supply chain stuff that might be interrupted and disrupted just a little bit, but certainly is bullish in my opinion when it comes to Tesla, but from a technical perspective might be painting a little bit different story. We'll get to that in a moment. We'll kick things off with Facebook. This stock just keeps going down. Look, I'm not breaking any news here, but what I have identified from a long period ago was I have this green trend line in here, and I've had it marked out here for a while. It's basically, I mean, this goes back a long ways, and you could trace this trend line in a number of different ways, but I kind of got it back here in 2013, and to me, it just looks like we're going to retrace back to this line. Now, it depends on when Facebook gets back there. It could take a while, and it still could be up in this 189, 188 area over at Facebook, which we're basically where we're at right now. But from the shorter term perspective, what we were looking for was a higher set of lows. We've been talking about that here on the channel for a while. We're looking for a higher set of lows, and some of you might be like, what does that look like? Here's the Bitcoin chart. Just bear with me for a minute. I'll get back to FANG here in a second, but here's Bitcoin. Bitcoin was in this massive downtrend, and then just notice over the last few weeks, and I'm not saying that the downtrend in Bitcoin is broken, but this is kind of what we're looking for, okay? We're looking for the upper channel right here, this red line, to get broken and get bust up above and come back here and back test kind of a lower set, come back up here, make a lower set of lows. Basically what Bitcoin is doing is making a reversal pattern, is showing kind of a sign of a bottom. And I tell you what, when Bitcoin makes this type of move, I wouldn't necessarily call this speculative at this point. Bitcoin's pretty well established. So when something like this makes this type of move, it sometimes shows me that maybe that's the precursor to equities making that type of move. And we're talking about high quality equities, which I would still consider Facebook being. Now, we have not seen that yet, okay? We have not broken above. You're basically in this downward draft right here, and you haven't broken up above it. In fact, you actually confirmed that the downtrend is still intact over at Facebook. You just made another higher set of lows, a lower set of highs all along the way. We've got volume decreasing as well. That could be a good thing, not necessarily, especially if you're looking at this from a bull case scenario. But I've said it here on the channel time and time again, I wouldn't rush back into this one. I don't think we're going to have a V-shaped recovery in stocks, and I could be completely wrong by that, but I don't think we're going to see that, okay? And a lot of you that are new to investing, just remember this March low and having it snap back. That was really abnormal, and there was a lot of things that factored into that. I don't think we're going to have that. I don't think you necessarily need to rush back into these stocks. Even if this one reverses, it's got overhead resistance back here at 220, and it's got even stronger overhead resistance at 240. Not only that, we saw analysts dropping their price targets down to this 240 range, and so you'd expect some sellers to step in at that level as well. I personally wouldn't want to be rushing back into this stock. We do have earnings coming up in April, and it'll be, I mean, those are going to be some of the most interesting earnings calls and earnings that we've seen here in the last few years here on the channel. And we'll see how Facebook kind of navigates that in the future. But right now, Facebook is in a downtrend. It's making lower lows. It's making lower sets of highs. It has not reversed. It has not shown a sign of a bottom. It has not shown a sign of a reversal. I repeat, I would still be on the sidelines with this stock. We got stopped out a long time ago on this stock, actually at $220 per share. Wish I would have sold it maybe a little bit higher. I was pretty confident that it was, I thought that maybe we'd hold here at 220 on this stock. It did not. We were down here in the 180s. I think we will bottom out in this range, but my point is, I don't think we need to be in any hurry to jump back in to Facebook as a name, because I don't think it's going to make a V-shaped recovery. Moving on to Apple. This one is, boy, this one's so close. Okay. This is basically holding up the entire stock market, quite frankly. Okay. We've got this uptrend with Apple that has been intact for a while. You could probably draw that in a little bit longer, but basically this uptrend is still intact, but now we're resting on it. And quite frankly, we broke through a key technical level that was up here at about 157. Those were the previous highs that we had locked in on this channel. Once we broke above 157, you know it's a key technical level when you break through it and you just run. It basically shows you there were no sellers up here. There was just buyers of Apple, and it ran all the way up to $180 per share, only to come reversing all the way back down here. Now we're south of 155 on this one. I tell you what, the technical trend on this one is lower sets of highs. Now, it did not confirm a lower set of lows. Notice that this week lows closed a little bit above basically 2 weeks ago, but that doesn't factor in the fact that, you know, you could switch this to a weekly view if you felt like it with Apple, and it is creating lower sets of lows, lower sets of highs essentially in the shorter term. Some people might argue this is flagging out, and in a flagging out scenario, you actually will look for it to break out about the length of that, and so this one certainly could break all the way back up into the 180s, 190s. I tell you what, I mean, look, with all these stocks, you break above the highs. That's exactly what you're looking for from a bull case scenario. You break above the highs on this one, and it is a lookout above, and it's party time. That is why we continue to hold Apple here on the channel. That is why I continue to hold this stock, because it is not that far from the highs. It is like $30 from the highs. And even if it breaks support here at 155, there's another level of support down here at 138. That's probably an area where we still would be interested in buying this stock. And you still could make the argument down there at 138 that you're still in kind of an intermediate, kind of longer term uptrend with this stock. Technically, Apple still looks pretty good. That has me both confident that the markets might be finding some sort of bottom here at some point, but it also has me worried, because if Apple starts putting up big red candles, I tell you what, the rest of your stocks are just going to go really down even more. Okay, I hate to say it, but that's what's going to happen. My stocks as well. I'm continuing to hold a lot of these stocks. Speaking of the stock that I hold, we're moving on to Amazon. This one obviously announced their big stock split, and it made a big jump, but nothing has changed from a technical perspective. This is why we go over here on the channel the technicals every week. So when you see an announcement like Amazon stock split and everybody gets excited and the stock goes up 10%, the stock is basically where it was last week. In fact, it's lower than where it was last week. And we're not over kind of in our intermediate area here, which we have marked out. It's not really official, but there's an area here in like kind of the low 3,000s, 3,100 up to 3,300, where it's got to get through that. And if it doesn't really mean anything. In fact, we're more than likely, I think this is really just confirmed you're still in a downtrend with Amazon. Okay. We made highs up here at over $3,700 per share, and now we're just continuing to make lower sets of highs all along the way. You could argue that we're starting to make lower sets of lows here in the shorter term, but it's still a little messy and none of it is confirmed. Right now with Amazon, I would not be excited about this stock going up until it really got above $3,500 per share. You get above 3,500, then the all-time highs over at 37 are back in play, and that's when this stock could absolutely run. Because look, from a market cap perspective, 1.48 trillion. There's some people that could argue that just the AWS business is worth 1.4 trillion, let alone the Amazon.com retail business could be worth over $1 trillion. In my eyes, Amazon is easily a $2 trillion company. I think you could make arguments out in the future, 5, 6, 7 years down the line, easily a $3 or $4 trillion company. That's why we continue to hold these shares, and we'll look to add to them at some point. but right now I think you're just still on the sidelines with that one. Moving on to NVIDIA, I still got this on a weekly view. I'm going to switch it back to a daily view just so we get a kind of a comfortable view at this one. NVIDIA broke support here. Now, there's some support here as the all-time highs back in September. When it broke through those all-time highs, again, we know that was an important level. This level here at 228 was an important level because when you broke above 228, you went all the way up to $350 per share, only to come crashing all the way back down. Now we're closer to about $220 per share. This week just strictly enforced that you're making lower sets of highs. We made lower sets of highs. I think what we could do is drop this level of support now. It's not really, there is overhead resistance now up at 220, and you're seeing the stock having trouble anytime it's gotten over about $220, $230 per share over the last 2 months. It's gotten rejected. And so there's definitely an area of resistance up here, but there's absolutely an area of support down here at about $210 per share. So if you like buying the dip, if you're looking for areas to kind of add to positions, 210 would be the first area with NVIDIA where I would maybe think about it. Me personally, this trend is just still really firm, okay? There's nothing in this trend that's showing me that it's trying to reverse. It may be trying to bottom out here at 210, but my guess is if we pierce through that, my box down here is still intact. Down here from 115 up to about 150 on this stock, I would blindly buy this stock at this level. Again, when I say blindly, doesn't mean I would push all my chips in the table, but what it would do is if we are on this, if this downtrend is going to continue and it continues all the way down into this green zone, that is when I would quote buy the dip. Okay, I wouldn't necessarily wait for a sign of reversal because we've got a strong area as a sideways consolidation here. I would expect those buyers to show up. If they don't, look, I would be wrong and the stock would keep going down. It wouldn't be the first time I was wrong, but it wouldn't be the first time that I bought when we move into sideways consolidation. That is an excellent area to buy. Now, that could turn out to be the case with NVIDIA here. I am watching this closely. This is a stock that I will likely buy here pretty soon. I am waiting in this area. Quite frankly, I like it here in this 210 area. I just don't want to be burnt because I have my sights set on a lower price. I don't want to get burnt and jump in there a little too soon. I'd rather be a little bit patient. Again, I don't necessarily see a stock like this, which I think has a rich price to earnings, price to sales multiple pretty much across the board. The multiple on this stock is really rich, and so I don't expect it to snap back up to all-time highs. And in fact, if it snaps back to all-time highs, well, you can buy the breakout because chances are if you break to all-time highs on this one, you could easily go from $340 up to $400 on this one, and I would take that gain as well. Moving on to Google, much like Amazon, is simply in sideways consolidation, and this week just confirmed that this downtrend that we've made really since earnings and announcing that split is just still intact. You've got a set of highs up here, lower set here, lower set here, lower set here. You could argue in the very shorter term, you are making lower sets of lows, okay? Excuse me, higher sets of lows here. I'm gonna zoom in here. You got a low here back in February 23rd at about 2,500. You made a higher set at March 8th at about 2,530. And if this week stops out and you put up a green candle next week somewhere in here, didn't have to go up that high, well, all of a sudden now it looks like maybe you made a higher set of lows. That's why we're watching these very closely. I really truly believe, and this is really just a feeling, it's a little bit from technicals, a little bit from fundamentals, a little bit having over 20 years experience buying and selling stocks, seeing multiple crashes, multiple pullbacks. It feels like these stocks want to bottom out, but at the same time, it doesn't feel like they want to snap back up to all-time highs. That's why I'm not jumping in here with all my chips in the middle and unloading all my cash into these stocks. We're still being patient. It looks like to me these stocks want to bottom out. We'll wait for that confirmation because if we are wrong and we break support on Google at about $2,500 per share, well, look out below. You're probably coming maybe $2,000 per share. That's the there's a lot of downside risk if you break these levels of support, okay? Because the entire market would just come cascading down. There's a lot of pressures on this market. I'll likely do a video here on the weekend that talks more about the macro environment, the inflation, the stuff that's happening in Russia, and how that's impacting investors and the market from a technical perspective, fundamental perspective. I'll post a video on that, so I don't want to go too in depth on that, but there's still a lot of downside in these markets that could materialize in the coming weeks ahead. And so we want to be careful. Now, moving on to Microsoft. this one is, I mean, it's in a downtrend, but you could argue just like with NVIDIA, it has bounced off this 275, 280 level multiple times really over the course of almost 2 months now. It is kind of bottomed out there. Now, I'll be honest with you. I've actually bought this stock down at that level. Not a lot of it, okay? I probably need another 10 shares of Microsoft. I've probably bought 3 shares, and this is in an IRA account where you get $6,000 in deposits. So it's not like I have unlimited amount of funds in my IRA account, okay? And so I have to be very careful with my purchases and my sizing on that. And with Microsoft, I'm kind of buying 1 or 2 shares at a time down at these levels. Look, if you have a much larger account, you're trading on margin, you've got a 401k, you got employer match, and you've got 100,000, 300,000, a million in there. Look, you could be, you adjust your numbers based on how many shares you want. The most important thing that I don't think a lot of investors do is, number one, figure out how, once you've identified the companies you like it from a fundamental perspective, you like it from a valuation perspective, you like it from kind of a, depending on your time horizon, 10, 15, 20 years out, however it is. Once you figure all that out, maybe you come over here to a technical chart as well and kind of figure out the best time to buy. Figure out how many total shares you want. Figure out how many total shares of a stock you want. And look, it's based on your portfolio size, okay? If you have $1 million portfolio and you want a 4% allocation into Microsoft, well, it's pretty simple math. You would know exactly how many shares you need to buy. For me personally, inside my IRA account, $6,000 in deposits, I think I have $70,000 or $80,000 in there. Well, I want about $2,000 to $3,000 worth of Microsoft, somewhere in that ballpark. So between 10 and 12 shares of this company. I'd like a few more shares down at these levels. I have been nibbling here. If you do break this level, you've got areas of consolidation here much lower, south of about $220 per share. If that materializes, then you start re-rating all these stocks, and you probably be a little bit more aggressive on your purchases. Moving on to Tesla. This one is confirming basically everything that we already knew about this stock. I've got a ton of different lines on here. We'll try to clean this up as best we can and keep you entertained as well. We thought maybe we could bottom out down here at about $709 per share. That's where the stock was last week. It really bottomed out here, came rallying up, came back down. Some of you saying, well, is that a sign of reversal? Not really, quite frankly, okay? We got highs up here, lower set of highs, lower set of highs, lower set of highs. Yeah, you could argue in the shorter term you did this, okay? You made a little bit of a shorter term reversal over the last couple of weeks, but if you want to switch this to like a monthly view, it looks terrible, okay? Look at those red candles on here. I mean, it just is a disaster, okay? You got big red candles showing up, but they're starting to get a little bit shorter. And the volume also, notice that the volume is starting to fall off as well. Those can be, not all the time, but those can be signs that selling might be overdone. It might be that the sellers are getting a little bit tired and the buyers start to step in on this one. We've got an area marked out here. I tell you what, if you got it intraday below $700 per share, I think that's a price where I'd be comfortable with this one at, because like we talked about with Tesla, there's going to be a lot of tailwinds when it comes to high oil prices, people switching to electric cars. That makes a lot of sense to all of us. But then there's going to be a lot of headwinds on the other end. The fact that there's going to be raw materials, supply constraints, all those types of things likely going to last into the summer, if not into next year, maybe even longer than that. These things might be even more permanent than we realize at the current time. So it's going to stunt Tesla's ability to deliver as many cars as they possibly can. I tell you what, if Tesla was able to deliver as many cars as it possibly could, like Apple can deliver iPhones and other types of companies can deliver their products like software companies, well, this company is way undervalued. $822 billion market cap. If this company could just sell Teslas right here like iPhones, this company would be worth way, way more. There would be a huge amount of demand for this company. And so in the longer term, we're very, very bullish. We also saw missteps this week from Rivian. We saw Lucid. These companies are nowhere near competing with Tesla on any level at all. And so Tesla has at least a 2 or 3 year run rate. I think even with Ford and GM kind of stepping in, they are going to be the premier electric vehicle. And if they can continue to pump these things out at a high margin like they have been, well, this company is well suited to turn things around from a stock perspective. But from a technical perspective, in the shorter term, this thing still looks like it wants to go down. Just like all of these stocks, they all look like they want to keep moving down, but many of them, including like an NVIDIA, a Microsoft, including Google as well, to a certain degree, Amazon, Apple as well. I tell you what, they're all at levels where we would expect them to find some footing. If they continue to go down, we are probably going to have to get even more excited about buying these stocks here in the coming weeks and months ahead. I urge you all to just stay patient. The headlines, the macro environment, everything is telling us investors that we don't need to rush. There's no big stimulus checks coming down the pipe. There's no lower interest rates, likely higher interest rates. There's lots of conflict out there that is causing a lot of negative headlines. I don't think we need to rush back into these stocks, but we are monitoring them very closely, and we're looking to buy the dip. The other thing we're looking to do is subscribe to the Investor Channel newsletter. It is 100% free. I send it out every Monday. I just started this last Monday. I send you stocks that I buy. I send you videos that I've watched from other YouTube channels. I'll send you bits of information that I think you might find informative on Monday. And like everything here on the Investor Channel, it is free. Hopefully you guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.